Good morning and welcome to the April 26th edition of SuperGrowth MultiBaggers. Today we're going to take a look at a particularly interesting company, Hain Celestial Group, producer of health foods, Garden of Eden chips, Hain's oils, Celestial teas. The company was control shifted from sleepy management to engaged capital. In the process, management was replaced with people with a lot of successful experience in the food business, and this company's financial statement trends have turned around, and it's developed real momentum in the last couple of years. And we're particularly enthusiastic or excited about this because we modified and developed software in the last couple weeks that is designed to find these kinds of companies, and it seems to be working and quite powerful. So, all right, we'll start with a brief market risk assessment. The market is currently high risk according to our assessment. New purchases 4% of cash position. The risk calculation is based on the proximity of the S&P 500 to the indicated buy at and sell at levels versus the current stock price, and the approximately 100 growth companies' current price proximity to their indicated buy at and sell at prices. So as a result, we are currently about 84% in cash. All right, there's a quick look at the assessment. So it's 3.5% from the sell at, 6.6% from the buy at, and we'll shift now to Hain, the Hain Celestial Group. This is a look at their company summary chart. Top graph is free cash flow and return on asset trend. Middle graph is financial strength trend, and bottom graph is our estimate of intrinsic value versus the current stock price. And as you can see, the current, according to our assessment, the current stock price is about twice the estimated intrinsic value. And that's not uncommon with companies in our portfolio. Most of our top performers do trade at substantial premiums to our estimate of their intrinsic value. In the case of Celestial, it's because it has just recently turned free cash flow positive, as you can see in the top graph, and our intrinsic value estimate is based largely on free cash flow. And in these companies, the important thing is the value they create, not their current price to intrinsic value. The middle graph is particularly important. That looks at a number of different ratios, interest coverage by free cash flow, cash position in relation to total liabilities, free cash flow in relation to total liabilities, debt in relation to our estimate of equity, the value of equity. And the trend here is very strong, and that's impressive and important. So, quick discussion of current management. In 2017, Engaged Capital, an activist investor, began to assemble what would become a 15.9% position in Hain. A year later, they took over the board, appointed Mark Schiller, CEO. Previously, he was Executive Vice President and Chief Commercial Officer for Pinnacle Foods. He had run other divisions, had fairly senior positions at Pepsi, Frito-Lay, Quaker Oats. Also on the board now, Dean Hollis, Senior Advisor to Oak Tree Capital, and Glenn Welling, who was the founder and CEO of Engaged Capital. They got a new CFO in December 2019, so roughly a year after the CEO took over. And he was the former chief accounting officer of the Hershey Company. Dean Hollis, former president and chief operating officer of ConAgra Foods. Welling's background includes 7 years as managing director at Credit Suisse, head of their investment banking advisory business. He built that group into a leading advisory business, advising over 100 billion in transactions. So these are highly capable people, and they're really accomplishing something with Hain. You can see it here in the graphs. Revenue growth is pretty anemic, but look at that gross profit growth. You know, that is basically the company replacing low margin sales with high margin sales. Bottom two graphs, operating free cash flow turned positive in 2019, and now pre-tax free cash flow per share just turned positive. That's an important inflection point we often find when companies start to generate positive free cash flow. That's when their stock really starts to perform. We'll take a quick look now at their financial statement momentum. And here the comments: major improvement, neutral, major improvement, improvement, neutral, major improvement. This is pretty dramatic and pretty consistent. So excellent progress there. We'll take a look now at our buy at and sell at level. As you can see, the stock's been weak over the last, this is a daily chart, so the last couple weeks. Actually, right now it's number 5 in terms of proximity to indicated buy at level. Currently trading at 40.64, indicated buy at price of 37.16. We like to be prepared for opportunity when it presents itself. So we track the price of the 100 growth companies with the strongest financial strength, financial statement momentum. And Hain happens to be number 5 right now. All right. Finally, take a look at the buy at and sell at levels in specifics. Current price 40.97 when this was prepared. This was as of Friday's close, so it's shifted a little. Right now 40.54, so down 50 cents. And indicated buy at 37.50, sell at 47.84. Distance from buy at 8.5. Distance from sell at 16.8%. All right, that's it for today. Thanks for watching. You can learn more about our methodology on our website, SuperGrowthMultiBaggers.com. Just click on methodology. I think it's important to put this video and our other research in perspective. You can also subscribe there. Now $49 a month. We've recently reduced our monthly subscription rate. And please leave any comments below and click the like button if you like this video. You can become a subscriber to the channel, which really helps us a lot. And thank you again.